cash flow is the money that comes out of the operations of the asset, right? So that's a return on capital for your investors.
Hi, everybody. David and Drew with Nighthawk Equity here. Today, we'll be talking about when investors should expect to be paid during their multifamily investments. Drew, tell us a little bit more about this.
Yeah, sure. Thanks, David. So there's 3 times when an investor should expect to get paid during their investment in a syndication. So first off, your cash flow. You're going to get cash flow, or you should be getting cash flow every quarter from your syndicator, or maybe even every month, depending on how smooth the deal is. Number 2 is at a refinancing event. So maybe 2-3 years after you buy it, they've completed their business plan, gotten the property to be worth more, and they refinance it, extract extra cash out and send that back to their investors. And then your third option is at sale. So maybe it's the end of the 4, 5, 6 year period, and they've completed their plan, and it's time to sell the asset and return money to their investors. And so that's the third time that an investor gets paid on a deal.
All right. So, Drew, what are the main differences between these types of payouts?
There's some big differences, right? Cash flow is a return on capital, right? So you have your $100,000 investment, and then your cash flow is the money that comes out of the operations of the asset, right? So that's a return on capital for your investors. And then your other cash out events are return of capital. So if you have a refinance, let's say you put $100,000 in, and then you get a $60,000 checkout later, you've taken your capital balance down to $40,000, and you basically lowered your investment in the asset. And then of course at sale is when you get cashed out of all your funds. So the way we calculate them is a little bit different, even though every dollar is the same dollar to you as an investor.
Now, how do all these different payouts factor into the overall return if someone is looking to kind of holistically look at the type of return they're getting from their investment?
For your overall return, you want to look at all 3 of these things. So they're all different components of your investment, right? The best metric to be looking at is your internal rate of return. People call it your IRR. And that basically takes all your different cash flow streams, your distributions, your refinances, and your sales, and it says how much are they worth in comparison to time, right? So the formula is a little bit complicated, but basically your IRR is going to take all of those things and know what time they were given to you and give you a number. So this is where you hear people say, I got a 12% return, or I got an 18% return. They're really talking about your IRR in those calculations. And the other thing to note is that the quicker you get your money back, the more valuable it is, because a dollar that you get today is worth more than a dollar that you get in 10 years.
All right. Thanks so much, Drew. For everyone watching, as always, if you haven't scheduled a call with us, please feel free to do so. You can do that by visiting nighthawkequity.com/call. And we'll love the opportunity to speak with you and get on our notification list. So till then, catch you on the next episode, and thanks for jumping on.